Don't say you're on the run to the other side, my love. But you never do. Sugar, there's a reason why we lose. You say you wanna cry, but you never do. Sugar, there's a reason why we lose. Let's have a bit of fun till I downfall, my love, if you feel like I do right now. Don't say you're on the run to the other side, my love. You say you wanna try, but you never do. Sugar, there's a reason why we lose.
How's it going? What's happening with everyone? Mr. Freeze? How's it going, dude? Nice of you to stop by. Would you look at that? Would you look at this distribution we've had today? It's almost like, you know, I've got a ball, a crystal ball here, considering it's a Monday for the recent video we put out. It's like we've got a magical crystal ball. But let me know how you guys are doing. You take any trades today? I mean, this is the most distributed day ever. So let's get to marking. If we get up to the overnight highs and the IB high, and then let's see if we can break a row down here, and that is it. I mean, if you want to get super aggressive, we can, and it really wants to not move, we can fade back in here. And then this is really tight, but just below the value area low down here. You know, if we want to get super aggressive, we can be buying anywhere down here. I'm just sort of mapping out these levels right now. And then sort of anywhere up here, here and then here. So yeah, that's pretty much it. Delta is negative 5k on sesh. So not a huge amount either. Chrissy boy, a few scalps L in the morning. Nice. Nice one, mate. That's what I like to hear. I actually think I might add on the last size onto this. Yeah, cumulative last size. Uh, that's not what I was expecting. It's too much faff, honestly. I'll need to do it later. See if we can mirror NQ there, just so you can actually see what the prints are. Oh, mate, it took me about 3 years. I've been trading for over 10 years, man. It took me about three and a half years, roughly. And then basically order flow was the answer. Nice, mate. Well, considering we put a video out yesterday, wow, NQ just going bananas, doing NQ things. Considering we put a video out yesterday regarding specific day types and what you need to be doing, this is precisely what happens on a Monday. So you're not taking any breakout trades. You're simply fading, waiting for the market to establish a range, and then fading back in. Huge plus delta at 73s. Well, that's the thing, mate. The order flow. If you simply look at a DOM, um, it needs to get to your key inflection levels for you to actually, pay attention. That's the main thing. Because when the market's currently in this range right now, it's not. There's no trade here. You're at point of control. Let me reset the delta here so we can basically establish what's going on. So the market needs to break here. Let's just put this here. For the upside, the market needs to break 72 and a quarter. So order flow is not the strategy. Order flow is the confirmation and the thing that gets you into the trade. Um, Couple that with some correlations, and it depends on which markets you trade. So trading treasuries to trading grains, to currencies to indices, they're all completely different. They have different tendencies, different personalities. And what I mean by that is some sweep highs more aggressively, um, some have better follow through, some pull orders more, some have a thinner book, some absorb um, levels over a more number of ticks than others. So, for example, I'm just using this as an example. So the 10-year note is much thicker, so the absorption happens over one to two ticks, whereas NQ will probably happen over 4 points, and then ES is thinner now, so you're probably going to be expecting something to the tune of 4 to 8 ticks, just because it's thinner. But back a number of years ago when ES is thicker, it would have been happening over a few ticks. Nice, nice, Aaron. That's what I like to hear, dude. Yeah, I mean, fundamentals are important. I wouldn't say, it, fundamentals are not as clear cut for indices as other markets, for example. Like if you're specifically trading the dollar, then anything that is, hawkish for the Fed basically means the dollar is going to go up, you know. Whereas in bonds, anything that shows higher rates basically means bonds and notes drop. Indices can take it either way, because you've got tons of other factors in there, especially with options now. There's a lot more volume in options, so it's not as clear cut as to how indices will take it, to be honest. But I like your style. The main thing about fundamentals is it should keep you in and out of bad trades. So if you have prints that come out where the market really needs to rebalance quickly, um, you're not fading that. You should be going with that. But you also need to know what is an out of standard deviation report, you know? So you need to know your numbers in that. You need to probably spend about an hour a week running through the numbers and, seeing what the highest retail sales number is, what the lowest retail sales number is, and if it comes into those levels, then the market's going to have to quickly rebalance. So it's kind of a way to look at it. So I suppose that's the question, mate. There's in the description of this video, there's a playlist. I'm not sure if you've been through everything, but it should become. There's a couple of things you want to be noticing. Delta, who's in control of the market. These types of things you need to pay attention to. And if you're wondering, delta is just simply a measurement of buyers and sellers. Nice, Aaron. That's what I like to hear, dude. That's what I like to hear. Well, that's typically the thing, mate. It's it's basically a battle against yourself. My advice would be, mate, if you're trading indices, I mean, if you say to me that you're struggling and then your main market is NQ, then I'm not going to be too pleased, to be honest with you. I wasn't really paying attention there, but just absolutely dumped here and then bought right back into value. They're really really not letting anything get out of value at the minute. I mean, they absolutely love this price here. So try thicker markets, mate. Thicker markets are easier. You get more time to make decisions. You know, definitely something for you to consider. To be honest. Good evening, Nico boy. How's it going? Well, that's a good point, Max. That's a good point, mate. Just get your yeah. You basically now can trade ES and NQ with these firms, and that's pretty much it. To be honest, you know they've made their stance pretty clear. Specifically Top Step, so won't be trading with them any longer. Your most powerful days seem to occur in balanced days with sweeps of overnight high or low. However, I'm currently challenged by not identifying imbalanced days early enough. Do you have any advice on how to improve basically recognizing those days? Yes. Initial balance high and initial balance low. So this is a perfect example. We have the IB low here, the IB high here, right? The IB high and IB low is extremely tight today, right? And very typically, when you're below IB low, you have a higher probability of being in price discovery than not, right? Let me get the pen. Pen, pen, pen. Because I feel that this is important because I struggled with this many years ago until I just, drew some rules around it or basically put some rules. So, generally speaking, right, within the first hour, this level is set, okay, here and here. So, you can decide to trade in the first hour, that's completely up to you. However, it's kind of hard because you've got tons of volume. It's harder to make sense of it. At those times it can whip back in your face. You can go for breakouts. It's up to yourself. However, the the most probable and easiest way for your life is to probably try and trade after the first hour. Let the market show you um, the state of play for that session. So if it's a much bigger range for the day, the initial balance high, initial balance low will be much bigger. As soon as you break below the IBL or above the IBH, then you can have the chance of being on price discovery, right? Which means you need to not fade, or you need to have an extremely strong level to fade. Now, very typically, Monday, Tuesdays are going to be more balanced days, right? Because there's less volume and there's not normally data that comes out on Monday, Tuesday. Wednesday, it starts to pick up. Thursday, Friday, everyone is ready to fire. You've got tons of news on Thursday and on Fridays, and those are the days where the market tends to bounce around. And then typically Friday close is normally consolidation. Typically, you'll maybe get, if it's really one-sided delta, you maybe get loads of positions closed off. That's when you see the power hour. If it's really one-sided delta, then as we know, only 5% of positions are probably carried over to the next day, probably even 3%. So if it's really one-sided, then they need to close out those positions. That's why in the last hour you probably get the market pulling in from where it actually was. So if you're one time framing in market profile land, or above the initial balance high, initial balance low, or previous day high or previous day low, if you're cracking through those levels, then you're in price discovery. And then if you do best and balanced days, then you typically need to avoid those days, or just be really cautious on those days. So hopefully that makes sense. And there's nothing wrong with Top Step. They just they basically want you to trade ES and NQ and effectively hold the position for, they would rather you take a chunk of a trend, to be honest, typically. Do Yusuf? Absolutely not. Absolutely not. If you were to come to me, uh, uh, and basically I was to direct you, or put it this way, if I had everyone in this room, right, and had a pot of cash to distribute to you guys to trade on my behalf, no one would be touching indices, to be honest. You know, you'd be trading micros and indices. I would be having you on thicker markets, um, just because it's easier to manage. It's much slower, smoother, easier to read. It's not as jumpy and bouncy. The only indice I would probably consider trading would be Eurostox on Eurex, just because it's a thicker market. But I would probably put you on something like probably treasuries or grains or some Eurex products or something. Yeah, Max has got it spot on. It's just much easier to read. I mean, NQ. I don't know. I just feel that it's just so much harder to trade NQ. I mean, look at it. Look at the bid and offer here. There is nothing there. Two contracts. I mean, seriously, at any given time in the next 5 seconds, this thing can bump 5, 6 ticks. Look at the spread as well. It's a mental product, you know? So that's the type of position where if the market is extremely bullish, I know you basically buy the dip and close your eyes, you know? Or if it's coming to a key level, you go with it, but you need to have something like a 20 tick at least, maybe even more than that, to be honest. You need a huge stop in NQ. Um, and the trouble that I've found in thinner markets, and maybe this is just me, is because you're wrong much quicker, right? You, for me, it really tilts me. Do you know what I mean? And I'm not meaning that and when I take trades, I like to actually be in and out quickly. But the fact it moves so quickly and it's so unpredictable, it it kind of tilts me, to be honest. So for me, trading thinner markets, it kind of makes me enter into a state of play that I'm not really looking to be in. So I kind of fade that, to be honest. Nico, yes, yes, Eurostox is nice and juicy. I mean, put it into perspective, right? Look at how I need to make sure that I'm not. Yeah, I've got the pen on. I don't want to lay out any bids here or anything. Jesus. Um, so look how thin this is, and this is actually. Oh, I'm not going to say thick, but this is not too bad for ES, right? Eurostox, you're talking 300-400. You're talking like ultra bond thickness, and it depends as well, and then you're using the DAX for correlation there. So just because you go onto YouTube and you see all the people trade, I mean, I can't remember the last time I brought up a stream on YouTube and saw anyone trade anything but NQ or ES. You know, I personally don't trade them unless it's extremely obvious. But then again, it's not something I can't stream treasuries because you'd be bored out your nipples. You can't do anything. At this time of day on treasuries, it's like 10,000 on each price, depending how thick it is on the 10 year. So it doesn't move. So you can't stream that. It's not fun at all. Yeah, but good question so far, guys, to be honest. This is like watching paint dry. But then there will be some people out there right now that will be, I don't know, saying this is some sort of crazy mad W and we're about to go to the moon up here. Uh, you know, I don't know, there's a W. So, by those standards, yeah, I don't know, it's ridiculous. Or we get out, there's a trend brewing. Here's a trend. Honestly, I don't really believe in all those kind of weird patterns, to be perfectly honest with you. Um, I mean, I don't even think I have them. Is it a horizontal ray? Is that how you draw a trend line? No, it's not. See, I don't even know. I don't even know if I've ever drawn a trend line on this charting package. That's crazy. I've only had it for like 8 years. No, I don't. That's crazy. Line? What about line? Is it that? Yeah, it is. Okay, so here's a trend line. It's broke above it. Now we're retesting and shit. Nah. Um, to be honest with you, as long as the journal you can import your stuff easy, mate. Um, as long as you can import your stuff easy, then that's the main thing. Like, i.e., export a CSV file, import it, so you're not having to do shit. Make sure you've got your max adverse excursion, max favorable excursion. Um, yeah, and just make sure there's some decent stats in there. To be honest, I mean, they pretty much do all the same thing. If you've not, I use TraderSync just because it's the one I've used. It doesn't necessarily mean it's the best. I think the user interface is quite nice on it. Um, but it's yeah, it's good. There's a link to it in the description if you want. It helps out the channel. Um, I think you're probably going to be paying something like $40 a month for 40 bucks a month for a good journal. To be honest with you, to be honest. So we'll see if the market gets into these boxes at the minute where we can actually look to see some action. But at the moment, let me just draw this line so I don't forget, because then I can clear, copy and move down here. That was the last thing, and then we can clear. and then we can recenter, and then we can see. So yeah, why did that? Did that go all the way up there? Anyway, okay. Valentino, how's it going? What's happening? Very low volume. Oh, really? Okay, let me see that, mate. Is that better? Is that better? I've just turned it up full. Let me know if that's better for you, mate. Apex is bringing back bonds. Nice. Thanks, buddy. Appreciate that for helping out the channel, dude. Sorry, the problem is I've tried 20-point stops for 60-point and just wait for it. Oh, mate, I mean 20 points is, well, I suppose it is NQ, dude, but it's just, I mean, and how many? What 20 points? 20 points times 4 is 80 ticks. Jeez. I mean, 80 ticks, mate, I'm not gonna lie, is like my. Yeah, that's like what I would consider a great 2 weeks, or what I would consider a good. If I had a stellar 2 weeks, that would be 80 ticks. If I had an okay month, it would be 80 ticks. Never mind one trade. But I trade different markets, so yeah, exactly. Alessandro, how's it going? Dan, what's happening, matey? Is the volume better now? Is it louder? It's the same. Oh, really? I know, maybe I can't turn it up anymore, mate, and I've got a headset right in my face. So see if you can maybe turn me up or something. Is anyone else got a problem with the volume or volume is louder? Okay. Okay. Mm, started a bit of Mr. Norden. Okay, no problem. Um, I mean, I don't know if I can actually turn it up anymore. I think I would need to shout. They all allow thicker markets. It's basically how they kind of want you to go for like 3 and 4 ticks. To be honest with you, if you take a few ticks, then they're not entirely too pleased. But to be fair, if you go with any of them and they put you in a path to live, then I don't see what the problem is. To be honest. Yeah. So actually, I've never really checked out his stuff. I watched a couple of his videos actually the other night just to see what the craze was, and if I'm honest, I mean it's good stuff. It's kind of what you do with order flow. You're basically always trading value all the time. His NQ stuff's a bit weird. I just feel it is a little bit, just set your entry. It's kind of like you're trading NQ and just wait for it to bounce around. I found that a bit weird. But yeah, overall the concept are spot on. It really shows you to pay attention to the limits and what's actually been trading. Um, The one thing I would say that's quite hard to watch about some of the older videos, such as some of Grady's stuff before he went into Jigsaw and Grady and sorry, Norden stuff, is they're big fans of X Trader or TT stuff, and it depends how you look. I mean, if you're extremely old school, you prefer cumulative last size or last size, like what NQ's got at the moment, right? So that's basically the equivalent of what you would see on a TT DOM, or what some of the stuff in Norden's videos is. Now for me, I find it much easier to read with the inside prints personally. So you can see the red is what's currently hitting into the bid. The actual white is the best ask. That's the best bid. It's currently trading at 5, you know. So the actual filled colors is where the last price has been executed. That's much easier to see than this, you know. For me at least anyway. And I've used both. I've used the last size and cumulative last size styles, and I just find it much easier to look at inside prints, to be honest. And I prefer, as you can see, the market fights against each other in a diagonal manner. It's not horizontal. It's not horizontal, right? So you've got 31 versus 40, for example, and they're battling against each other, hitting and or selling and buying, you know. Um, so if I didn't have this type of setup, I would definitely find it harder, to be honest. Yeah, I much prefer the inside prints, to be honest. Yeah, that's a really good point, Max. Really good point. I would say the main thing is order flow trumps all, and that's the thing. If you're short and you see aggressive size lifting the offer, and the offer being pulled, then you're clearly wrong. You don't just sit in your hands and pray. You know, and that's typically for a lot of traders that come into the channel, to how we actually trade here and the sort of context that we teach in videos. It's a completely different world, honestly. I, you know, um, I've been trading for over 10 years, and I go to some people's charts and I'm like, I've got no idea what's happening here. None whatsoever. You know, and I know, and the problem is, if you spend so much time, learning, I don't know, ICT concepts or whatever, right? You know, extremely overcomplicated stuff that, is a ridiculous name for like just a general sweep and pull back into value. Um, it's hard to unsee things. It's almost easier if you start trading and you don't learn all the nonsense. So if I'm honest, the amount of rubbish that is on YouTube, and just people that have got no idea what they're doing, that are uh, putting out stuff, and people see it, and it really, it knocks them back years, because they spend probably 6 months with a random strategy to solve a YouTuber and tweak it, and you know you've got no idea if it works, to be honest. And then you need to really put everything together and understand what your own approach is. And years ago, mate, order flow. So the thing is about order flow in general, and you're trading, say, a thicker market, you're not going to have these boom and bust phases. Or if you keep your stops relatively tight, you're not going to make a huge amount in a day, but you're also not going to lose a lot in a day. And that's the whole point of trading. It's like a job. You shouldn't be having these huge losing days and huge winning days. Keep it consistent, keep it smooth. So you know when you're coming in for a day, this is the amount you're going to lose, the amount you're going to win. None of these home run crazy days where you're going to make like 10 grand a day or something ridiculous. It's just not realistic. because in order for you to make that amount, you need to be taking on crazy amounts of risk, and the big wheel always turns. You know. Exactly, and to sort of go into the point of what was happening on the last video, the one thing that a lot of people suffer for is probably everyone in here at some stage in their trading is you have a strategy and you literally just expect to trade the same shit every day and expect it to work, you know? So if you're a mean reverting trader, um, and you like it when markets are like this, where they're balanced and are chopping around because you're fading back into the means, right? You're going to be more successful than a Friday NFP day. I mean, I know I'm stating the extremes here, but you'd be amazed at the amount of people that would say, "Oh, I get killed today in NFP because I faded back in." I'm like, well, obviously, NFP is a day where if there's going to be price discovery, it's going to be that day. And then guaranteed what will typically happen the days prior is the days prior will probably mean revert to NFP, because no one's going to get too out of line before NFP numbers come out. Yeah, exactly, Aaron. Jeez, I mean, trading is kind of like poker. It's a hard way to make an easy living, to be honest. Um, it's really a battle against yourself and in order to make the right decisions. That's the thing. If I could name a few key components in trading, what would that be? You mean what does it take to get you over the hump? Is that what you're meaning? Okay, we're approaching the breakouty level up to VWAP here. Let's see if they're just going to punch it back in up at 72s. Let's extend that because 72s here is the value area high. So let's see what they're going to do. But yeah, I would say some of the key concepts that you need to gather is, I mean, you've heard these a million times before, but the hard part is implementing them. So you need to be patient. Okay, in trading, you don't get paid to click the buttons; you get paid to wait. You need to always try and stay objective and in the now. And if you do have a bias going into the day, you need to be so quick to take that bias and throw it out the window. You can't be stubborn, to be honest. Let the market tell you what it's going to do. Wait for information. And also, when you get in before you get in a trade, you need to assign what you're expecting to happen. Just don't move the stops or whatever while you're in the trade until you get really efficient at it, because you're never going to make a good decision while you've got money on the line. It's just not going to happen. Not going to happen. And the other thing is to be selective. You need to have the skill set where you walk up to the market and say you are a breakout trader, and you need to look at this chart right now and the flows for today and go, this, if I trade in this, I will lose money. So I am literally better going outside, doing anything but trading. Because if I trade in this, I'm going to get my ass handed to me. Ah, right. Ah, well, I've just went on a tangent for nothing, mate. But yeah, Chris, you definitely get paid to wait, mate. You know, just because you turn on the screen at your given time doesn't necessarily mean there's going to be a setup. And instead of making the market or forcing a setup, you're better to work on your edge. Things like build on your statistics, work on your journal. You know, I'm not going to say back test per se, but just things that is relevant for your trading. You know, work on that. Get to know your product better. Work on correlations. You know, things like that. You're much better to do that and spend time with the journal than you are forcing trades and clicking buttons. And it all depends on your trade frequency too. You know, how many trades do you take a day? For a scalper, you'll probably take more, 10 to 12 roughly. If you're only looking to take a slightly bigger chunk, you probably only need three. You know, and guaranteed if your average winning day is three trades, guaranteed that the look at that, we're pulling instantly back in. Um, the days that you've lost the most money, the most money, you'll probably found that you've just been, absolutely smashing your left mouse. You know, you've probably done like 30, 40 trades or something. And you must be exhausted after that as well. So what I would say is the market revolves around volume, right? And very simply, volume means money, right? You need money, moolah, for the market to move. No Benjis, no move. Okay? Very simple. And that's why on higher volume days, higher volume months, the market tends to move more. It goes through levels more. So you need to understand the volume because I feel like I say this a lot, but I think I'll need to tell you again. If I said to you right now, right, we've just got a call, we've got a client that wants to buy $1 million of ES, right? What would you do? So you need to think to yourself, how would you execute that? Well, you're not just gonna go in and start, you know, banging here, are you? You're not just gonna go in and go, oh, look at me, I've got £1 million, let me just buy everything. You're not gonna do that because there's other people in the world. So if you have got 1 million to buy and the people are selling, well, you can gobble them up, right? You can let the market drop a little bit because, well, of course, because you can buy it back up anyway. Do you know what I mean? So you need to start thinking about the reason why the market ebbs and flows is because people have got positions to get off, and typically the market is seeking higher volume areas. So that's a crazy thing you think about because a lot of the time people don't need the market to go that directional. They can buy on futures and then hedge on options. So there's volume. That's extremely important, right? Then there's your key levels. So you typically you want to be involved at your key inflection levels, things like previous day highs, previous day lows, value area highs, value area low. But the thing is, context, like we discussed, context is literally everything. Who's in control of the day? Is delta extremely one-sided, but the market's flat? Well, that means the offer has been absorbing passively, has been absorbing all the buying. So, and who do you think in the market? What type of player is more likely to be absorbing passively on the limit? It's going to be large players because majority of retail just go in and just go, oh, I think it's going up, market buy. You know what I mean? They'd probably never lay out a limit a lot of the time, right? So all these things is kind of like putting the parts of the puzzle together. So because delta is the difference between market buy orders and market sell orders. And if delta is say plus 10,000 but the market's flat, then the offer's absorbing. Vice versa on the other side. If delta is negative 10k and the market is flat, the bid has absorbed all the selling. And then within that, you'll see some levels where there's going to be puke points for each person. So you need to understand the context for the session and who's in control. So I recommend you to watch the Delta video if you've not watched it. Something important that you think about. And that is pretty much it, to be honest. There's not, just context, volume, and sort of your absorption and order flow concepts on the DOM. That's it. It's not extremely complicated, to be honest. Hurry up and wait. That's class. That's the thing, matey. Yeah, because this you're spot on, Miranda. Because the what people seem to forget is just because it's buying and selling doesn't mean there's an edge, right? Like we've said, if the market doesn't get to here or get down here, then it's no bueno, or here. You're not trading this. I mean, what are you going to do? Fade this in for 4 ticks? Maybe buy down here or something, back up here. I mean, you could go for that. This is actually probably quite a good play, to be honest, if you're buying down at this level. And then you can ride it, because if you're buying down here, then your target's going to be here, because the market is never, ever in a month of Sundays ever going to get to here and just blast through it on a Monday with no volume. It's never going to happen. So if the market comes down to here, right, you are going to be looking to buy, right? And I would probably just I would just be getting out here, to be honest. I'm not wanting this to come up to the stick volume node and faff around, because if you bought down, say you bought here or here, and the market came up, your stop is going to be pretty tight. It shouldn't really be cracking below the lows, as an example. You'd want to see some absorption on the bid, and that's pretty much it. You know. However, would I be approaching this the same if it was a Thursday? No. Understanding the context and what the theme of the session is more important than the strategy, to be honest. The only way you're going to get consistency is if you probably trade glow bets, because it doesn't really do anything. A red herring is if it just goes one-sided. Don't diddle in the middle. Yeah, exactly. So now we're getting up here. So we'll see if it pops above. And then we've got two areas. It can crack above here, take some stops. If it does manage to hold above here, then we can go up to this level, and then likely we then target back down into here. But look at the amount of buying that's happening here. 390, 266, 302, 337. So tons of buying here. It's not really doing anything. I would note, though, that everything is pushing up. And then NQ, of course, which is the wild brother, tends to be the one that pulls in first. So if NQ works its way down here, then, shock surprise, but ES is not going to break above here while NQ's down here, right? NQ needs to be up here in order for this to pop. Let me know if you guys have got any other questions. pain. Nah, it's not even close to a lot of delta. I mean, it's negative 2k. It's just might as well be completely balanced. But if you can see how just aggressively the market's banging the first sniff of out of value, it's just been hammered back in at the minute. So there's some prop firm stuff that you guys can check out. I would probably there's not really any one of them I recommend, to be perfectly honest. I don't really recommend any of them. If you want to trade prop firms, there's a link there. How's about that? And if you want to support the channel, here's a link where you can help my coffee fund and my ramblings, to be honest. Max, so it depends on day, mate. So typically, when it's a more volume day or volatility day, so say Thursdays or Fridays, I'll typically hit the shorter end of the curve because it moves more. Treasuries treasuries are more honest, so anything that's super bullish for the economy, I'll look to basically sell the short end of the curve, and then and the reason being is it just moves more, to be honest. Uh, and then if it's on a balanced day, I'll trade the 10 or 30 year. I don't really trade any of the ultra products, to be honest. Um, nah. Like a rare occasion, I'll trade UB, but it kind of gives me heart palpitations, to be honest. Yeah, I'm not surprised. Let's get rid of all these drawings here. Actually, they're kind of still playing true. Let's see if we can break above 71 and a halfs. It needs to hold above 72s in order to at least sustain a breakout, which I would like to think will pop one way or another, surely for the last hour and a bit of what the market's left. But yeah, Mondays are normally, it's not exactly the most action packed session, is it, to be honest? It's if I had to pick one of them, um, it would probably be FTT, just to the fact there's no commissions. That's it. That would be the only reason. Um, I think now, know, they've basically did almost like a marketing blitz, got some traction, screwed over a lot of people in the process. Um, but they made the rules too easy, to be honest. And you know, it's not my business, so I can't really comment on, their sort of setup and how they've done it. But they've basically now tightened up the rules, so you now almost need to make more money, which makes sense, right? They give you as a 5% drawdown and 5% target. If you want to basically take large positions out of a move, you're probably best with Top Step. If you want to trade Eurex, you're probably best with a trading pit. Um, that's really it. I don't see any real reason to go with Apex or my Forex funds or whatever. No, my funded futures, that's the one. However, they're kind of the same. To be honest, they're all the same thing, realistically. Go with one that pays out, ideally. Um, one that your edge is better. So if you trade thicker markets and you can't, then no bueno. But yeah, it really depends. But as always, if you do decide to use one of the links, then be cautious in yourself of what you're doing. Chris, not really, mate. No, I don't really combine stuff. I mean, it gives me more context, but I don't really let any technicals like that sort of tell me it's going to be down, to be honest with you. Jay, I think with props, mate, they're not things are going to change in the next 6 months anyway. So just take as much money out of them as you can, dude, and trade the personal account where it's good to go, But you still you're still able, of course, to continually get more leverage than what you need. That's the thing. Um, but yeah, definitely buyer beware. Aaron, so thoughts on footprint? I'm not a I'm not a major fan of footprint, to be honest. I mean, I've used it. I sometimes still do use it. Um, Footprint works really well when you look at the left of the chart, to be honest. You know, um, it's very difficult when it's in the right of the chart. Your footprint for me is really just spotting imbalances and you know areas where there's loads of delta or thicker volume traded. But for me, everything is in the DOM, and then your volume profile and high volume nodes or low volume nodes are there. Just something for you to pay attention to. But the thing is, I'm saying that I've been doing this for many years. If you're first getting into order flow, I can understand coming onto stream here and seeing four DOMs like this is probably quite daunting. As a first sort of step, getting into order flow, probably footprint is a good bet, to be perfectly honest with you. Um, the reason being is, it just allows you to see what's behind the candle, to be honest. So, yeah, exactly. Exactly. That's what, from my experience, it works really well to the left of the chart, to be honest. It's hard when you're actually looking at the current candle because you can see shit happen and then, before you know it, that it's no longer in balance in the current candle. Um, but yeah, and at the end of the day, all a footprint chart is it's just the inside prints. It's just here, right? That's all the footprint is these inside prints you're seeing here. You're then missing the bids and offers. So So like right now, for example, we can see that there is a lot more buying than there is selling coming into the market, right? I mean, we can see that here. However, the market is not doing anything. So buyers need to continually press, and we can see that by all this buying here, right? So this basically tells you that the offer has been absorbing. So if we do start cracking below here and buyers don't defend, then they're going to need to cover and become selling, and we may have a puke. So that's how you look at it. Because in theory, this is going up, so should this. But it's not. For the last 10, 15 minutes, it's been actually going down the way. And what that looks like is offer absorbing, sellers hitting lightly into the bid, right? And in the bid pulling or cancelling is what that looks like. So you need to think, okay, that's weird. What does that mean? Well, you can see that if the market does get below this level and above here, here's the two put points. So right now, all of this aggressive buying, I'm saying all of aggressive, it's not that aggressive, but it's at least something to discuss. This buying here, the put point price gets below this level, round over here. These buys are under pressure, then they'll have to sell, and then we'll have a pop lower. And most likely what will happen is if you do get down here, the people that were absorbing and selling, their take profits will be down here. And then when the market pops through, it'll instantly, their take profits will be down here on the limit. They'll start working the buy side. And then the market will just bob back in, to point of control up here. That's probably the most that's going to happen. Or we do it the other side. But it doesn't look the most likely because all of the absorption on the offer. So note this level here. This is the complete low. So they may bang it, come down a little bit, and then they'll probably, the guys that were absorbing up here they'll be working the buy orders down here, somewhere down about these prices, down here, and then will probably flip, and then work its way back up. Is kind of the plan. Does that make sense? So we'll see what the market's going to do, but we've got the clock's changed here, so I don't know if this world clock has. No, it's still got another hour to close, right? Yeah, that's not changed. So watch this. If they continually bang it, these guys that are buying up there will need to cover, and then let's see if they start working the bid. NQ is now approaching the low day. So now punching below this level into this. What is this actual exact level here? Down into here is 60s. If we do get that far. Jesus, so much liquidity down here. I don't think it's going to get that far, to be honest with you. So the last twice I've gone down here, they've just literally hit it back in. And then it's then back to status quo, balance again. As we were saying, that's typically what happens, you know. And you need to think about, it's just there will be some people down here, right, that will be selling that breakout. There will be people that would literally on a Monday sell the breakout down there. I'm not kidding. The chances of that happening and it goes back into the range, it's more probable to basically buy this than it is sell it. Because nothing's gonna happen. I mean, at most we might get a hit down here to then revert back in, but we're certainly not going to go too far. Anything can happen, I suppose, but your most probable setup is just to remain in here. Wow, look at NQ go. So let's see how much if they continually bash this, or if the buyers really, really defend. You can see, look at 332 absorbed in the bid. There is an iceberg here. If this gets taken out, this could go. Tons of absorption there on the offer. Huge amounts of buying there. I'd be super surprised if we cleared out all this liquidity, to be honest, down here. It's a really good position right now to buy it back in. Right down below 60s as well, a couple of ticks. Let's see if they pull it back in. You just took another bump, yeah, exactly. They are drilling this here though. So you see some more negative delta come in. But if they continually absorb here and then buy in, I mean, look, they're really defending this area on the bid. 221 shown there. And all this liquidity down. It's going to take a lot to break here, man. It's going to take a lot to break down here. I mean, tons. The VIX would need to be going sky high right now in order for this to happen. I mean, I'm not checking the VIX, but there's a good amount of two-way here. Doo-doo-doo-doo. Sales are really having to drill through here to try and at least even get a few ticks. It's mental. Is this is it, the market closes at 4, right? I'm all out of sync here because the clocks went back. It's normal time, isn't it? It's just the clocks went back in Europe, right? Did you manage to get filled at all, Chris? Wait, so it is, right? Or am I losing my marbles here? Because I'm wondering why the market's why there's so much volume here. He's saying it closes in 2 minutes. It is 2 minutes, of course. It's an hour behind. Fucking hell. I was wondering why there's a lot more volume coming in. Yeah, this is the algo shit that's happening. Wow, I'm way out of sync today. Jeez. Okay, let's see how far we can drill it back up. There we go, slowly but surely working our way back into POC. Right. Ah, okay. So my clocks are off. Everything's back an hour, honestly. I'm not joking. I did that in more markets today, and I was the exact same thing happened. I was like, why is there so much volume right now? Also, doesn't help that my clock here is off. That doesn't help. I thought that was set to world clock. Ah, okay. So it's just me that's you know, Europe and London. It's back an hour. Yeah. The part that was confusing me the most here is I thought this would have changed this clock, but it didn't. Because right now it's 8 for me. Yeah, so of course it's an hour behind. So there's 4 minutes left of this, and then that's pretty much it till 5 past. Well, that was a bit lackluster, wasn't it? However, look at the amount of absorption on the offer, though. Jeez, oh. Well, I mean, it's not a huge amount, is it? Well, it is actually. It's like 3,000 contracts, and yet we've not really went up. The offer needs to pull, and then we can work our way back up to 66 potentially. So, here be the target. Yeah, I probably should do that, mate, to be honest with you. See, this is where, which I like about, the DOM in general. If I was looking at a candlestick chart, I would have had no idea about that. Whereas I saw the volume come in, I'm like, something's not right here. Do you know what I mean? You can never, you can never miss it. To be honest, we know what happens for the last 15 minutes. You know, happens like clockwork. So I don't even use any sort of moving averages at all. I used to use the 50 and 200s many, many years ago, but I just find it just a bit of distraction, to be honest. Let's see if we can break back right into 66. Or are we going to work our way back down to 62s? Oh, nice. I don't know if you guys are getting our questions. Aaron, that's great. I like that. It's like a dad joke, that one. I mean, literally any single line NQ, bounces off a wick, anything. If you put a pebble in front of NQ, it'll bounce 20 ticks. Well, hopefully you guys enjoy the stream. We'll try and get back to a little bit more consistency. We'll go for 3 times a week, to be honest. Is what we'll try and do. I was going to say, miss your lovely names too much. That pretty much looks like it. I think for the last 30, 40 minutes, we'll probably pull our way in, to be honest, up here, but can't imagine it been very exciting. Anyways, guys, hopefully you have a great rest of your evening, whatever you do, and we'll potentially catch you guys tomorrow. No problem, guys. Enjoy your evening. Take care.